Welcome everyone. Today I'm going to show about fair value gaps and breakaway gaps, when it forms and how we can trade with them. So let's hop into a PDF. Fair value gaps are also known as BC and CB to represent them whether they are bullish or bearish. BC stands for buy side imbalance, sell side inefficiency. CB stands for sell side imbalance, buy side inefficiency. I'm not going in detail from this PDF. If you want it for free, DM me on Instagram as Neuron444, link in the bio and the description. A fair value gap is created due to a pressure of either buyer or seller. We can spot them by looking at three candles. In the case of bullish, the first candle wick or the high should not be touched the third candle's low. This will create the middle candle as a gap or vice versa. On the other case, sellers will be coming to fill that gap, which will be act as a support for many traders to enter their position right from the 50% level. Similarly, bearish fair value gap or CB is created due to huge sellers' pressure after the sweep of liquidity. We can identify them by looking at the first candle's low that is not touched by the third candle's high or create a gap on the middle candle body. In this case, buyers will be balancing the gap, which will act as a support for the price to continue lower. So here we are on S&P 500 5-minute chart time frame. We have a resting liquidity below the lows. Let's mark it out and see whether it gets taken out or not. So here is our sales side liquidity. As we got our sweep and price created a imbalance known as bullish fair value gap. Let's mark it out right here. This is our bullish fair value gap. This, this is the first candle, this is the middle candle, and this is the third candle. So see the highs, see the high and the low. They are not meeting each other. So let's enter right here. Stop loss right here and target this highs. This will be at our equal highs. Let's put buy side liquidity. Price get tagged in, closed above the fair 50% level of the fair value gap, and we got our TP. So for the next example, we are on NQ 15-minute time frame. Let's mark the highs as our buy side liquidity, and let's see if it gets taken out or not. So our buy side liquidity. As price takes it out and created a bearish fair value gap. Let's mark it out right here. So bearish fair value gap. And let's zoom into 5-minute time frame for our entry. Price do have created a high near the fair value gap, which give me a confirmation for the price to fill the imbalance. This is the high. So let's mark it out right here and enter right here. Stop loss will be here and target will be this lows. Will be act as our liquidity area, sell side liquidity area. This gives me at least 1 to 3 hours. As New York opens, we get filled the imbalance and got our TP hit. Many traders have a question in their mind that where do they enter on fair value gap? According to me, I personally use the 50% level of the fair value gap or the mean threshold, which often gets respected by the price. If it is not, I will not enter my position as price do continue its way disrespecting fair value gap. In the bullish case, If the price respecting the 50% of its level and closes above it, I get a confirmation to enter for a long. On the other hand, if it closes right below of its level or the 50% of its level, that this indicates that price will be continue its way lower. Similarly, in the bearish case, if the price respecting the 50% of its level and closes below it, I get a confirmation to enter for a short. On the other hand, if it closes right above the 50% of its level, this indicates that the price will be continue its way higher. So we will be entering our position at this. This is called the mean threshold of the fair value gap. This is the mean threshold. We will be getting the mean threshold in the case of bullish as well as bearish. So entering on the 50% of the level of fair value gap is often get respected by the price. If you will enter on the 50% of its level, you will be getting a nice TP and a stop loss according to your risks. Let's see a mean threshold entry model. Here we are on ES 5-minute time frame. Price swept the sell side liquidity and closes above the 50% level of the fair value gap. This is our fair value gap. So see how the price getting respected to this fair value gap series. How they are closing above the 50% of the level. Price came back to this level and closes above the 50% level series. And we may target this resting liquidity or the buy side liquidity. So if we will be entering our position long, we will be entering at the 50% of the level. Our stop loss will be at this low and target to the buy side of the liquidity. So we will be getting 1:2 risk to reward ratio. Breakaway gap is likely said as a fair value gap which does not get filled by the price, no matters where they are on premium or discount. If the pressure or the momentum is high, it will create a breakaway gap. It will be filled later on. For the bullish case, if the third candle closes above the middle candle's high or the wick, indicating a strong move upside without a retracement in it, you may enter for a continuation trade towards a resting liquidity. Similarly, for the bearish case, if the third candle closes below the middle candle's low or the wick, indicating a strong move downside without a retracement in it, you may enter for a continuation trade towards a resting liquidity. In a bullish breakaway gap, price created a strong move upside with a fat body indicating price to continue higher. Similarly, as bearish breakaway gap, price created a strong move downside with a fat body indicating the price to continue lower. Let's see some example of breakaway gaps. So for this example, here we are on ES 15-minute time frame. We can see the price that went higher with a massive momentum candle, creating a fat body. This creates a breakaway gap. This closes above this high of the middle candle. So this created a breakaway gap, and the price will be continue higher without any retracement to it. So this creates a breakaway gap. Hope you enjoyed the video. If it If you did, please hit a like and subscribe to my channel and follow me on Instagram for further updates. Thank you.